Welcome to Markets Now. I'm Michelle Rook with Arlen Suderman of StoneX, and we did see livestock futures pop to the plus side on Tuesday. The grains kind of easing back a bit here in Arlen. Were we kind of due for a little bit of a correction there, or was that maybe a little bit of farmer selling?
Yeah, all the above. We'd hit some technical objectives, nothing really significant to stop us. But we saw a dramatic increase in farmer selling on both sides of the equator. And, when farmers are rained out of the field and they look at the gains and they have that chance to really focus on sales, that's what they did. That kind of brought things to a stall. The funds had lightened their load significantly of their big short positions they had built in really across the grain and oilseed complex. They still have generally a short position, a net short position, but they really lightened that load. And we were getting into overbought territory with some of these markets as well.
Absolutely. Do you think that the funds are going to lighten their load much more?
Well, I think over time we're going to be, particularly if we see this move toward reinflation that we've been talking about for the last 6 months. Remember, I've been saying on these interviews for the last 6 months that come the second or third quarter of this year, I thought the funds would look at the reinflation problem and say, we don't really want to be short the commodities. And so I do think over time we're going to continue to see that. That doesn't mean that prices necessarily have to keep going up or that I'm bullish the commodities, but it does tend to elevate the level at which the market manages supply and demand. And I think we've been seeing that play out. There are certainly some fundamental reasons we've seen some strength of late, but frankly, the market has moved more than what's justified by any of those reasons right now, if you take a look at the actual impact on supply and demand.
Yeah, I was going to ask you, do you think that the weather and crop concerns are pretty much priced into the market right now?
Yeah, absolutely. If you look at U.S. weather, I think we're looking at a change in the pattern, and I think we're going to be actively back in the field by the end of this week. We'll have periodic systems move through, but not the soaking rains that keep us out for a long time. And so I think we'll get the crop planted. When you look at southern Brazil, that's going to continue to be a problem. But Rio Grande do Sul is the primary problem. They were expected to be the second largest producing state in Brazil this year at a little over 23 million metric tons. 70% of that was already harvested. Typically, after harvest, it moves fairly quickly to the ports, but there's likely to be some soybeans caught in storage, not yet moved yet, that may have got caught in floodwaters. The remaining 6.9 million metric tons is going to be varying degrees of yield loss, harvest loss, being pod shattering, sprouting into pods, etc. We don't know the scope of that. But then you come back to USDA's production estimate versus CONABI's production estimate, and that 10 million metric ton difference between the two. And the cash market's been acting more like USDA's was more accurate than what CONABI's has been. And so if you start taking 6-7 million metric tons off of it, you actually get them closer to where our estimate was. And it's still not enough to send export business to the United States to justify rationing U.S. demand with higher prices. On the corn side, yes, we know we have problems with the leafhopper spreading disease in Argentina. We believe, based on our sources there, they've lost 7 to 10 million metric tons. Well, at a 2.1 to 2.2 billion bushel carryout for this year, that means we have an extra 15 million metric tons. And next year's production, if we have normal weather this summer, is expected to add to that. So that means for Brazil and Argentina combined, we need to pull off at least 15 million metric tons off of their production before we even start about the possibility of needing to ration U.S. supplies with higher prices.
Is it likely we'll get any more fodder out of South American numbers in the WASDE on Friday? I mean, will USDA actually start reconciling numbers, getting closer to the South American figures we've been seeing?
I don't think we'll see much change in the corn and soybean numbers for Brazil. I think we may see a small ratchet down, reflecting the recent problems that we've seen there with dryness in Paraná and Mato Grosso do Sul for the corn, but so far that's partially offset by above trend yields in Mato Grosso. On the soybean side, I think they'll start taking a little bit off because of Rio Grande do Sul's problems, but it's too early to know. I think we'll see a much bigger adjustment as we get into the June report for that. For Argentina, I think they'll be a little bit more aggressive on the corn, not down as low as what some of the private estimates are from down there, but I do think they'll start moving in that direction for Argentina. And they may take just a little bit off the soybean production estimate, but even the local estimates in Argentina can't agree if we've had any notable damage to the soybean crop yet.
Yeah, no doubt. So the WASDE on Friday, this is the first new crop estimates that we're going to get. Do you anticipate they're going to be bearish? I mean, is that the other reason why maybe the grain markets have taken a pause?
I do. The average trade estimate for our corn ending stocks for the 24-25 marketing year for the U.S. is better than 2.2 billion bushel carryout, well, actually almost 200 million bushel increase from this year. My estimate's a little bit lower than that, but still north of 2.1 billion bushels. So nothing really to get excited about there. On soybeans, the average trade guess has a 4 handle in front of ending stocks. I actually have a 5 handle in front of ending stocks. It really comes down to exports. It comes down to what USDA does, what Brazil does as far as expansion of soybean area this coming growing season there. If they start pulling back on soybean area, then we could see stronger exports. If they continue to add to soybean area, then we're going to continue to see problems with our exports shifting away and Brazil taking more market share there.
So you mentioned that the weather rally, that a lot of that weather news might be priced into corn and soybeans, but wheat was the first market that's tried to price in some of these weather concerns. Is it all priced into that market too?
Yeah, wheat may actually have the more interesting story, and that eventually could help the corn market, maybe some help on soybeans as well. With wheat, I remember well in 2010 when we had a big hot dry spell hit the Russian wheat crop, and we doubled the value of Chicago wheat soft red winter wheat futures in 5 weeks' time. That's how the funds can take over the wheat market when there's a story in Russia. And I've long said that the funds trade fundamentals in the Black Sea more than they do the fundamentals here in the United States. And so I think that's something to keep our eye on. That's the southern 40% of Russia's winter wheat crop right now that is stressed due to dry weather. Temperatures have moderated, so that's not a problem right now, but it is dry. If that dryness continues into June, then we could see some significant losses. Over the next 10 days, it's expected to maintain with very little relief. But we need to get it in well into June to start doing the real damage that would justify this crop prices really taking off. Is that possible? Absolutely. It's just nobody really has that much confidence in the forecast going forward to really trade it yet at this time.
Then we also ran up into some chart resistance areas too, didn't we?
Yes, you look at some of the, depending on the market, the moving averages and where we were expected to go to. We hit some of those objectives. And with that, the fund's just kind of backing off. They're still in a net short position for the most part, but they've eased their risk exposure quite a bit by lightening the load of short positions.
And Arlen, what about the cattle market? Higher today, we got above some technical objectives. Again, I think above the 100-day moving average, but this market's been, 2 steps forward, 1 step back, a strong cash, but then we keep running into bird flu headlines. And so do we just chop around for a while or what?
Yeah, the good news is there were no fresh bird flu headlines today that I saw. And so that helped the market. We had higher cash last week, $1 to $2 higher in the north, $2 in the south for this cattle market. And you had to wonder, with packer margins being so bad and product prices softening up, what the packers knew, or were they just trying to help their margins? But they pushed choice cutout prices up $4.56 a hundredweight yesterday. That gave some more encouragement to the board. If we can't sustain product movement, though, at these higher prices and prices have to go back down, that's really going to make it hard for the cash price to stay up here. And that's a concern for the board. But for today, it was positive. I thought it was interesting. We got the export-import data from March out yesterday, that when we look at the first 3 months of this year, cumulative imports of beef are up 25% over last year's pace. So that is really, that flood of imported beef now is really kind of limiting our upside potential until or unless something changes to add additional fresh bullish fodder.
Okay. And I guess just quick, the hog market has had a little bit of a correction now. Do you think that that market can start to stabilize a little bit too?
Well, after 9 straight days of losses on the board, I think a bounce was in order, but we still didn't finish the day well. We had a nice bounce and then we finished near session lows. So that's really not that encouraging.
All right. Thanks so much for joining us. Arlen Suderman with StoneX. That's Markets Now.